Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to talk about my investment strategy moving forward and 5 stocks that I am buying in 2024. If you follow the channel for some time, you may know that in addition to performing research and analysis of various companies, I like to read and learn about successful super investors, as this can give me more insight into their portfolio allocation and their investment strategy. Last year I talked about Peter Lynch, and for this year I want to talk about an extremely underrated super investor who consistently outperformed indices with his remarkable results, and that super investor is Josh Tarasoff. Josh Tarasoff doesn't have a lot of public interviews, and you cannot find a lot of video clips from him talking about his investment strategies. But his public portfolio, Greenlee Lane Capital, manages a portfolio of almost $300 million, and he has an extremely concentrated portfolio consists of only 9 stocks. Josh Tarasoff do not have an investment team or various financial analysts. He pretty much managed everything himself, from doing research to rebalancing the positions to writing letters to shareholders and so on. His largest holdings are Amazon, Brookfield Corporation, Markel Group, Google, and Microsoft. I personally own 3 out of these 5 stocks in my own portfolio, and therefore I studied Josh Tarasoff's investment philosophies, his research papers, and limited letter to shareholders on the internet, and went through them carefully. What I found is that Josh Tarasoff operates differently from most of the other investors out there, and this is the key to his success. Let's look at his essay about impact and duration, which he published this in October 2023, basically less than 2 months ago, in which he discussed his investment strategies in detail. What I have called real-life investing leads to heads-on confrontation with duration. Duration is the force multiplier of all that compounds, and the most underrated thing I can think of in the worlds of business and investing. Even the most eye-popping short-term results fade into the background before long. Only persistent quality has a lasting impact. Which leads to the question, after today's work is done, after the current concerns have passed away, what then? It's all too easy to miss this question and get stuck in a repetitive cycle, always falling short of the escape velocity that unlocks long-term compounding. When I started to ask the question of what then, about Greenlee Lane's investments, it led me to the goal of building a self-driving portfolio. One in which investments can be held forever because they shoulder the work of compounding themselves. One way of looking at the beauty of a self-driving portfolio is that it requires little maintenance, if any at all. Of course, there is continuous study of the portfolio companies, but this is not so much a precursor to obligatory measures as it is natural interest forming into deeper understanding. So instead of casting about for actionable ideas and scrambling to replace positions that have overstayed their welcome, I am free to fortify our foundations and expand Greenlee Lane's horizons. So this was the 2 paragraphs from his letter. I basically try to do the same with my own portfolio. I try to choose the highest quality businesses, the ones that can reinvest their cash flow and assets and return value to shareholders without the need to consistently rebalancing the portfolio. I try to do my own research on the valuation of the stocks and then try to hold these stocks forever, or at least for a long period of time, and let them compound capital for me. Basically, I'm trying to build my own version of a self-driving portfolio here. With US large cap and mega cap stocks close to their all-time highs, I'm not going to look into those stocks to buy them in 2024. I will look for quality and value in international markets as well as Canadian market, which in my opinion offer better value and quality at the moment. Now, let's look at the 5 companies that I've done my research on them and I will buy their shares in 2024. And note that I already own 4 of these companies in my portfolio, so only one of them is a new company for me. So number 1, the first stock that I will buy in 2024 is Louis Vuitton Moet Hennessy. I already own a small position in LVMH in my National Bank Direct Brokerage account, but I am going to buy more shares in the coming year. This is a stellar business with an extraordinary profit margins. They have organic and non-organic growth avenues, organic by increasing sales in various parts of the world, increasing their number of stores, or simply price of their products, and non-organic by acquisition of other luxury brands. They already own and operate 75 world-class brands under their umbrella. They have a family of various wine brands, including Hennessy. They own the highest quality fashion brands in the world, particularly leather products, including Louis Vuitton, Marc Jacobs, and Fendi. They own a family of perfumes and beauty products like Christian Dior. They own luxury brand watches like Bulgari and Tag. They own jewelry businesses like Tiffany & Co. And they are also in retail business with large beauty stores like Sephora, which is growing fast. They were able to consistently grow their revenue and profits in the last few years with an incredible profitability with a return on invested capital of 13 to 17%, which is impressive. In terms of the valuation, LVMH shares are currently traded slightly below its historical price to earnings and price to cash flow, and based on my discounted cash flow model, it's slightly undervalued at the moment. I will release a detailed stock analysis video about LVMH in the coming days and discuss this business in more detail, but for now, I will definitely be a buyer of this stock in 2024 at the current valuation. The next company that I will buy its shares in 2024 is Alimentation Couche-Tard. Couche-Tard is a Canadian company based in Quebec, which owns numerous gas stations and convenience stores around the world, in Canada, US, Europe, and Asia. I already have a small position in Couche-Tard inside my TFSA, and I will continue to buy this stock in 2024 to make it a full position in my portfolio. While the business on the surface looks very boring and old-dated, this company is a profit generation machine. With top-of-the-line management team and business execution, they are growing fast, incredibly fast growth in every single metric of their business, and they have incredible profitability metrics with a consistent return on invested capital of around 14%. They are buying back shares aggressively and paying out a fast-growing dividend to return value to shareholders as much as possible. On the negative side, I think Couche-Tard shares right now are slightly overvalued compared to its historical averages. I don't like to buy the stock heavy here, but if I see a small dip in the share price, I would absolutely love to buy more shares of this business. And my goal is to build a full position in Alimentation Couche-Tard in my TFSA in 2024, hopefully if we see a drop in the share price. The next company that I like to buy its shares in 2024 is Canadian Pacific Railway. This is one of the recession-resistant companies with an extremely wide moat. As I mentioned before, CP is an oligopoly with great potential to eat up even a larger market share in the future due to their control over Mexico, US, and Canada railway route, which is unique for a transport company in North America, especially in the current geopolitical environment where manufacturers prefer to move their factories away from China and Asia to Mexico. In this environment, Canadian Pacific would be a major beneficiary of this geopolitical situation as they own the only railway system from Mexico to Canada without any competition. Their debt is a little bit too much due to the recent acquisition of Kansas City Railway, but in the recent earnings reports of the company, the management team at CP promised that they will reduce the leverage on the balance sheet in the next couple of quarters, and they will be able to grow their cash flow at high single digits to low double digits in 2024, which would be great. Valuation-wise, Canadian Pacific is not extremely cheap at the moment, and in fact, they are slightly overvalued compared to their historical PE and price to cash flows, but for such a great business with such a great wide moat and potential, I think paying a bit of premium would worth it. I already have a small stake in CP and will build a larger position in the stock in 2024. The next stock that I will buy in 2024 is Monster Beverage Company. This is the only US-based stock that I'm going to buy in 2024. Monster mainly sells energy drinks beverages in more than 140 countries around the world. They have market dominance in energy drink category in most important markets like Canada, US, and Europe, while expanding their business in China, Middle East, and Asian markets. Monster stock performance in recent years is nothing short of extraordinary. In the last 5 years, Monster stock is up 128%, while Coca-Cola and Pepsi are up only 50% and 23%. If you look at longer time frames, you can even see more impressive performance by Monster. From 1986 to 2023, the stock is up 68,000%, which is a monstrous growth. Monster and Red Bull are the most selling products in energy drink category around the world, and Monster is using various marketing techniques and new product lines to combat with Red Bull and take the market share from them, particularly in Europe and Asia. In terms of new products, and in addition to carbonated and non-carbonated energy drinks, Monster also sells ready-to-drink iced teas and juice drinks, sport drinks, lemonades, juice cocktails, single-serve juices, and fruit beverages, which can be new revenue growth avenues for the company. While the business itself is great, in terms of the valuation, Monster doesn't seem like a cheap stock at all. It has a price to earning ratio of 37 and a price to cash flow of 36. Historically, this is a normal PE for the company, but PE of 37 is still high. For a company like Monster with explosive revenue growth, I don't think PE of 37 is too expensive. It simply is too good of a company, and even at this point in time with a PE of 37, I think the stock is fairly valued. Just look at the return on invested capital in the last 5 years. It is 25%, which is significantly higher than the cost of capital. This business is a profit machine, which I believe would be able to continue its growth. They should be able to take more and more market share in the coming years, and even at the current valuation, I'm totally fine buying more shares of Monster. So Monster would also be one of my buys in 2024. The last company that I will probably buy its shares in 2024 is Tencent Holdings, which is a Chinese company, but it has a global footprint. This is the only stock that I don't own it currently, and I'm considering adding this to my stocks portfolio in 2024 as a new holding. Tencent is an amazing business. They are a spawner business like Brookfield, Amazon, and Google. It means they use most of their free cash flow from their main businesses to invest heavily into new bets and startups, or invest in different companies around the world to be able to make profit from these investments in future. Tencent main businesses are mostly in China. They own WeChat, which is the most popular social media app and platform in China. They're also in digital payment processing business with Tenpay, as well as cloud computing business with their commercial cloud. They also have major stake in a lot of Chinese growing companies like Pinduoduo and Bilibili. On top of these extremely profitable businesses, Tencent is the largest game developing company in the world, as they own significant stake in various gaming studios. Tencent owns 40% of Epic Games, which is the studio behind successful games like Fortnite. Tencent owns 100% of Turtle Rock Studio and Riot Games, which are behind successful games like League of Legends and Left 4 Dead. Tencent also owns 10% of Ubisoft and 5% of Paradox Interactive, which are two large gaming studios in Europe. Tencent owns 20% of Sea Limited, which is an e-commerce platform and digital payment processor like Amazon and PayPal in Singapore. Tencent also has a stake in big companies like Discord, Reddit, Roblox, and even Tesla. It's just an incredible business with a global footprint. So this is also another stock that I love to own, and actually it has a very good valuation in sharp contrast to the most of the previous stocks that I showed you. They have a price to earnings of close to 14, price to cash flow of close to 20, price to sales of 5, which are all below the market averages and also below their 5-year average history. They also have a huge cash position and little debt. So it's actually not expensive at all. However, this stock has significant geopolitical risk as it is a Chinese company. If Tencent was a Western company, I think the share price would at least be 3 times more than this because of the valuation. But if you factor in the geopolitical risk into the equation, you will have a relatively high risk, high return stock, high risk, high reward stock. And as such, the stock, while the stock is extremely undervalued from a pure valuation point of view, I can say it's fairly valued because of the geopolitical risk. Anyway, I may start to nibble shares of Tencent in 2024 because of the quality of their business. There you are, guys. I hope you enjoyed the video, and if you liked the video, consider subscribing to the channel to see similar videos. Happy New Year in advance. Thank you for watching the video, and I hope to see you guys in the next video. Farewell.